All right, good morning, everybody. Thanks for taking some time to come join us today. I think we have a good webinar for you about experience modification factor, better known as experience mod. I'm sure everybody's heard of it. First thing we'll do is take care of a few quick housekeeping things. Today's presentation is live, but it's going to be through a PowerPoint slideshow. During the presentation, you could submit questions anytime. We'll have a Q&A period at the end to try to answer all the questions. To do that, all you need to do is go to the chat tab on the control panel that's on the right of your screen. Enter your question there, hit enter, and I'll be gathering the questions while we go throughout the day, through the presentation. After we finish the live presentation today, it's going to be saved to review anytime, or if you want to show your staff or whatever. It's at societyinsurance.com. It's going to be under the risk management tab under education and training, or it's also going to be in Society Insurance's YouTube website, the YouTube channel, along with all the other webinars we've done. So you can go back and look at any of the old webinars that are there. As everybody's gotten used to, we're all working remotely, so we're doing our presentation from home offices in different states. So forgive us if there's a technical glitch here and there, or if my Chihuahua decides he's going to attack the mean squirrels out the front window and decides he wants to make some noise. Before we begin, just do a quick overview of Society Insurance, do a little plug for us. We are a regional insurance carrier based in Fond du Lac, Wisconsin. We currently do business in 7 states. Those include Wisconsin, Minnesota, Illinois, Indiana, Iowa, Tennessee, and Colorado. But coming soon is going to be Georgia and Texas for us. So we're expanding a bit. We've been writing workers' comp coverage since 1915. Today we also have property, liability, commercial auto coverage, and kind of have really extensive knowledge and experience of protecting the hospitality industry specifically. We provide insurance to select business niches with a focus on the small details that make a big difference. Today I have 3 presenters for you. My name is Shelby Blundell. I'm a risk improvement representative with Society Insurance. Been with the company for a little over 10 years. Today that'll be presenting with us is Paul. You know, say hi, Paul.
Hey, good morning, everyone. Yeah, my name is Paul Furbringer. I'm a senior risk control representative here with Society Insurance. I have been with Society Insurance over 7 years and have over 39 years of experience in the insurance industry, all of which has been in the risk control safety field area. Carl?
Good morning. And
my name's Carl Schramm. I'm a risk control representative as well. Started with Society Insurance in October of 2020. Before that, I was previously a workers' comp claim adjuster for 5 years.
And we got Mario. She was having some, as I mentioned, the technical difficulty. She was having some dial-in issues. So
yes, can you hear me now?
I got you. Good morning.
Perfect. Thank you.
You can introduce yourself, Mario.
Can you hear me now?
Yes.
Good. I'll try this for a 3rd time. 3rd time's the charm. My name is Marielle. I am a medical claims manager in the Workers' Compensation Claims Department. I have been with Society Insurance for 11 years, all of which have been in the Workers' Compensation Department as a claims intern, a medical-only specialist, and most recently, a senior claims rep.
Awesome. Welcome.
Fantastic. Well, let's get started with this. Our learning objectives for this. The experience mod is a number that applies to your workers' compensation policy. It will adjust your base premium lower for accounts that are better than average from a loss perspective, and it will adjust your base premium higher for accounts that are below average from a loss perspective. By the end of this webinar, you will have a better understanding of how the experience mod really works and how it's calculated, and most important, the control measures you can put into place to help lower and control your experience mod number. The experience modification factor, first of all, just a brief explanation, very simple. The experience mod only applies to your workers' compensation coverages. And what exactly is an experience mod? The experience mod is a number which compares your company's loss history, both frequency and severity, with similar industries, with your competitors. The experience mod is calculated based on your company's previous 3 years loss experience, not including the current policy year. And what really does the experience mod do? Well, what it's going to do, it's going to adjust your company's workers' compensation base premium either up or down depending on that number. And how is it developed? Each individual state that Society Insurance writes business in determines the rate per $100 of payroll for the type of work that you do. This rate is determined by the state. The rate is then multiplied by the estimated payrolls you provide each year to determine what we call your base premium. And that leads us to our first myth. All experience mods are calculated by NCCI. Now, NCCI is the National Council on Compensation Insurance. This is a national plan. The NCCI plan applies in most states that Society Insurance writes business in, including Colorado, Illinois, Indiana, Iowa, Tennessee, and coming shortly, Georgia and Texas. Now, in Minnesota and Wisconsin, we have our own plan manuals, and we follow our plan rules to develop our experience mod factors. For any company with interstate exposures, NCCI will step in and develop an interstate factor using the payroll and losses we report in our statistical data to arrive at the experience factor based on the plan rules and the state-specific plan rules that may apply. Myth 2 is that an experience mod is based on your premium. An experience mod is not based on premium. It will affect your premium, either up or down, but it's based on payroll and the losses attributed to the class codes that are assigned to your account using either the NCCI formulas or the state applicable formulas such as our Minnesota and Wisconsin have. Myth number 3, an experience mod of 1.0 is good. Hey, an experience mod of 1.0 is average, but the goal here is to get that mod below 1.0, and this is where you start to see the cost savings come into play for your business. A simple example of this would be that your base premium is $10,000. We submit your loss history to the appropriate Workers' Compensation Rating Bureau each year, and they put this information into a formula to determine your experience mod. We then multiply the base premium by the experience mod factor to determine your premium. An average experience mod of 1.0 would multiply your base premium by 1.0. So thus, we would multiply our example of $10,000 base premium by 1.0, and you would be paying $10,000 for your workers' compensation coverages. If your company has a good loss history, your experience mod will be below 1.0. Let's say you have an experience mod of 0.75. In our example, we would multiply this number by the base premium of $10,000 to arrive at a premium of $7,500. This is a $2,500 savings over the company that has just an average experience mod of 1.0. And then let's look at it the other way. If your company has a poor loss history, your experience mod would be above 1.0. Let's say your experience mod is a 1.25. In our example, we would multiply this number by the base premium of $10,000 to arrive at a final premium of $12,500. This is an additional $12,500 over the base premium for an average company with an experience mod of 1.0. And the fourth myth that we hear is that all reported claims affect my mod. It is important, first of all, that you report all claims to the insurance company as they occur. And it's also important for you to know if there are no payments made, it is not included in the formula for calculating your mod. Remember, we only report payroll and losses to the rating bureau. If the claim was a report only with no pay, we do not include this in your statistical data. And then myth number 5, A loss today has an immediate effect on my mod. The Experience Mod Rating Bureau, either NCCI or your state plan, does not use the current policy year when calculating the mod factor because the current policy year is not complete. They use the previous 3-year loss runs. And on a side note, the statistical data used includes both paid losses and reserves. The mod is calculated 3 to 4 months in advance of the new policy year. So it's important for you to get a copy of your loss run 6 months in advance and work with your insurance agent and your claims adjusters to see what, if anything, can be done with open reserves, as these are included in the experience mod calculation. Sometimes reserves can be lowered. The problem we run into is the Bureau requires the insurance company to set reserves on a loss based on the expected losses. We do get audited on a regular basis to assure we are complying with the state rules, laws, and regulations. And another problem we have, especially here in Wisconsin, is the Department of Workforce Development is backlogged in signing off on claims, so we can't officially get a claim closed and remove any reserves left until the Department of Workforce Development signs off on it. So myth number 6, one large loss affects my mod more than smaller losses. Again, the Experience Mod Rating Bureau, either NCCI or the state plan, they recognize and measure both the frequency and the severity of losses. On large losses, the cap is generally around $250,000. Anything beyond this limit is considered non-rateable and is not included in the calculation. This figure varies by state plan. I would suggest you check with your insurance agent to determine the cap limits in your state for workers' comp losses and your experience mod. From a safety standpoint, I would prefer to see the one larger loss to the multiple smaller losses. The one large loss does not imply a pattern of claim frequency. When we get multiple smaller claims, this implies a potential claims pattern. And you need to remember that any one of these smaller claims could result in a much larger claim. I would be addressing the claims pattern with you to determine the causes of the claims, and we would develop corrective actions to take so we can reduce and or eliminate these claims. And myth number 7, I don't need a mod if I don't want one. I've had business owners tell me, I don't want one of those, don't give me one. Well, the Experience Mod Rating Bureau, and again, we're talking about NCCI and the state plans, have premium levels when the Experience Mod will automatically be calculated. You don't have any choice in that. And the following chart shows the premium levels for the states that Society Insurance writes coverage in. And as you can see, all 7 states that Society Insurance currently writes workers' compensation coverages in have an Experience Mod. There are premium levels when you are eligible for an Experience Mod, and you will get that automatically. The first column here shows a 1-year premium threshold, and a second column is for a 2-year premium average. So if you fall into either one of these 2 categories, you will be given an Experience Mod. And I saved the best myth for last, but first we're going to do a poll question for you.
Yeah, I'm gonna take a break here and get everyone thinking. So I want to know what is used to calculate the Experience Mod. Let's see who knows where we're at on this. Is it A, class codes? Is it B, payroll? C, losses attributable to class codes? Or D, all of the above? I'll give everyone a second to answer. We actually have a lot of attendees on this one and from a lot of different places. So we got answers rolling in. It's just another second here. The answers are definitely trending one direction. All right, I'll go ahead and close it out. Looks like we got 78% saying all of the above. Paul, what did you have?
78% are correct. It does include all 3 items. It includes the class code assigned to the type of work that you do. the payroll, and definitely the losses attributed to your class code. So yes, D is the correct answer. And now we can go to the final myth, and then we will get into the control measures that you can put into place to help control these. And I seem to have lost my screen. Oh, I love technology. Shelly, can you hear me?
Yep. I can hear you.
Okay. Can we get the next myth up there?
It is up.
I'm still seeing the results. Here we got all the good stuff coming next for you. There we go. All right, myth number 8, and this is the one I really chuckle at a lot based on, my 40 years of doing this type of work. I don't know how often I've heard from business owners, there's nothing I can do about the experience mod. It is what it is. Well, I'd like to tell them that the controllable mod is what you have direct control over. I've been asked over the years, why is my mod not at 0? Because I've not had any reported losses for the past 3 policy years. For each and every mod calculation, there is a lower limit that is set on how low the mod can go to. Now, if it can get to 0, then the insurance company would have to provide you a policy at no charge. Boy, as nice as that would be, the insurance companies wouldn't remain in business very long. The lowest mod I have seen in almost 40 years of doing this has been a 0.63. And anything above whatever the lower limit is what we call the controllable mod. Anything above this is controllable, and we can help you to develop and implement safety and claims programs to prevent losses up front and to develop these programs to handle the claims once they have occurred. There are several programs that Society Insurance can help you set up and implement that will have a dramatic effect on your mod. It's important to understand that the programs we are discussing are free of charge at no cost to our policyholders. These are value-added services through Society Insurance. So let's take a look at some of these now, and I'm going to turn it over to Carl to talk to you about the risk control measures out there.
Perfect. Thanks, Paul. All right, so I'm going to go through some of the programs here that can help control the mod. Those would be the written safety program, safety orientation training, free safety video program that Society offers, accident investigation program, nurse triage, and a return to work program. So the written safety program, the purpose is to outline the importance of safety in the workplace. Having a written safety program will help reduce the number of losses and the severity of losses your business will have. A good idea when you do have this program is to have the employees sign the safety program as soon as they start and they're able to read through the program. This will help create a culture of safety in the workplace. If your business does need an example of a written safety program, there is one attached in the handouts today. That is a Model 1 for a restaurant. And also, we have these located at societyinsurance.com. And if you do need additional resources on this, please feel free to reach out to a risk control rep if you need a copy as we'll be able to send one over. So the next program here is a safety orientation training. So every program should be unique to your business, facility, and roles, but there is 8 checklist points that every safety orientation training should have. Those are listed here as workers' rights, company safety rules and policies, basic health and safety, hygiene, work hazards, PPE, personal protective equipment, injury and illness reporting programs, and contact information for anyone that needs help with any safety training. A good thing with these, you should kind of change them up to department-specific training for each one. So if you do have, different parts of your business, each one should have a different safety orientation training in place, so they're able to complete their specific job duties. So next program here is the free safety video and blog service that Society Insurance offers. There's an extensive library of online training videos that are available to use. And you're able to access these videos by going to societyinsurance.com and going to risk management. There is also a handout here attached in the presentation that does show you how you're able to get access to these free safety videos online. I think a really good thing with these is to include having your newer employees watch these free safety videos when they do start. I would, be sure and include in a safety orientation program, kind of help them with some safety guidelines and what they should be doing. And it also, all these videos do show the importance of safety in the workplace, which will help prevent claims and losses. And then the last program here I'll be discussing is the accident investigation program. So the accident investigation program will help determine the cause of loss and corrective actions that should help reduce the chances of further losses occurring. Every accident investigation program should have 4 steps that should be included. The first one should be to document and preserve the accident scene. If there was any, equipment that malfunctioned or anything, be sure to take that equipment out of use. Then the next step should be to collect information. So this should be, sitting down with the injured employee and discussing what exactly happened, and then also interviewing any witnesses as soon as possible following the accident. The third step should be to determine the root cause of the accident. And then the last step that should be included is to determine corrective actions that needed to take place to prevent further accidents from occurring.
Awesome. So we have another quick poll question. That's really good information, Carl. I can't emphasize enough that our risk control team is here to help. I mean, that's what we do. So always feel free to reach out to any of us, and we can do what we can to help you. So per OSHA, what percentage can using an employee safety program reduce losses by? Is it 10%, B 25%, C 40%, or D 60%? Give everybody a chance to chime in here. Got a lot of answers coming in, but not as many as the last question. So I hope nobody fell asleep. Give it just another second here. Let everybody go. All right. Looks like the majority of people are saying 60%. Carl, what did you have?
Yeah, so actually, per OSHA, having an employee safety program could actually reduce losses by 40%. So it just really shows the importance of having this program set up. Just the simple one we have with the handout could just help reduce losses by 40% potentially.
Awesome. And Mario, we'll turn it over to you.
Perfect. Thanks, guys. I will now be discussing 2 additional programs. The first up is our nurse triage program. So question, what is the nurse triage program? The nurse triage program is a nurse call line that allows our current policyholders direct access to a registered nurse 24 hours a day, 7 days a week. The nurse triage program can assess and assist with managing work-related injuries while also acting as Society Insurance's after-hour call service for reporting new claims. How does it work? For all non-emergent injuries, the employer and the injured worker can call the 1877 number that is on the screen. When the nurse answers, they will gather pertinent information regarding the injury and will document this information. Upon completion of the call, the nurse will create a first report of injury that is submitted to Society Insurance, notating the facts obtained. Based on the type and extent of injury, recommendations will be provided by the nurse, which may include self-care, medical treatment. This treatment may include specialties such as emergency care, urgent care, or occupational medicine. Why should you use the nurse triage program? By using this program, you may see a reduction in claims and a reduction in the cost of claims, all while following a streamlined process, giving everyone involved a peace of mind. There is no additional cost for current policyholders to use the program, and any current policyholder has the ability to use it without signing up or opting in. For interested policyholders, you can request to be included in the first report of injury submission and any nurse triage updates. Those are sent via email at this time. If employers request this next level of involvement, please reach out to me directly at the information provided on the bottom of the screen. The second program that I'll be talking to you about is the Return to Work program. By developing, writing, and implementing a return to work policy, you are reinforcing your commitment to the injured employee's well-being. Research has shown that employers who have a written and active return to work program can result in up to a 70% reduction in medical costs when calculating the MOD if there are no lost wages. Keep in mind, return to work programs are viewed favorably by underwriters and can help determine the dividends for Wisconsin policyholders. The biggest goal in developing a proactive return to work program is to assist in returning injured workers to their jobs timely and in a medically safe way. When injured workers are given the opportunity to work within a light duty program, most of those individuals often can perform their normal jobs in a modified form. They can perform alternate duty work or can work reduced hours at adjusted wages. I think you want to go one screen back. There you go. A lot of the information that we've discussed about developing your program is available in a detailed workers' compensation return to work program handbook. That is ready to download via the control panel on the right side of your screen. I think it's listed under handouts. And then after the live webinar, you can find this handbook also on our website at www.societyinsurance.com. If you click the claims dropdown, then click the workers' compensation claims and scroll to the additional resources at the bottom, you can select Workers' Compensation Return to Work Program to download your own free copy.
All right, thank you. All good information, and again, reach out to us. We can help if you have more questions and stuff about it. We did have some questions come in, so we will start on those, and there's still time if you have thought of things and you want to enter them into the chat function on the right side there. Just enter it in and hit enter. First question I got was, when I develop my program, do I need to have different plans of action depending on the severity of an injury? Paul, you want to take that one? Paul, you might be on mute.
Oh, yes, I forgot to turn it back on. And Shelby reminded me. Sorry about that.
Before we started, I said somebody was going to do that.
So I had to do it. I'm the senior guy, so I'm getting older. So, but yeah, no, that one, when you put these programs in place, really the severity of a claim, yeah, it's bad, but by having the programs, you can actually, you'll get them treatment right away. But as Mario was talking about with the return to work program and the nurse triage, we can get it reported quicker. We can also get the injured people back into the workplace sooner than later. I hope that answers the question.
Okay. The second one, I'm going to direct this to you, Mario. They asked, can you explain transitional jobs a bit more? What is the difference between terms like temporary, light duty, alternate duty, or modified work? And then also, do I need to have all of these options in my plan?
All right. So I'm going to go with the second question first. Do I need to have all of these options in my plan? The short answer is yes. It would be beneficial for everyone to have those options available. But the biggest determination is what restrictions has the injured worker's medical provider provided to them. So having all of those options already available gives you one step in the door, gives you that flexibility to be able to offer any type of light duty work that may be recommended by the doctor. So it is always encouraged to have those options available. Now to go with the specific terms that were asked, such as temporary work. Kind of as it is assumed, temporary work means that an injured worker would be on light duty restrictions for a temporary basis. Think of a cut finger. Someone has stitches in their finger that may result in temporary work restrictions. Once the stitches are out, once the wound is completely healed, it is more often than not that those temporary restrictions will be lifted and they will now be able to return to full duty work. So think of temporary just in the meantime until that injured worker gets to that pre-injury status. Next to the term of light duty work, kind of what I said. Light duty is a recommendation by a medical doctor addressing what the injured worker can do. Some of those terms are sedentary work, which is majority of sitting work. Light duty work many times is limited lifting, 10 pounds, 15 pounds. There also is, it can be outlined on an as needed basis depending on the injury. So most often light duty is the work restriction that the doctor assesses because of the injury. Alternate duty it means that someone can work a lesser hour. Say someone usually works 40 hours a week. Not all employers can accommodate with that, but they are able to instead offer 20 to 25 hours or 5 to 10. That alternate duty still allows them to do their job in just a lesser hour capacity if you have that ability to accommodate. Modified work is kind of going back to all three of those combined. Modifying what kind of work you have available for them. If someone is an auto mechanic and cannot do that job, but you instead have office work available, that is modifying what their work is, modifying their job title, and can just be done in a, again, lower hourly capacity or on a temporary basis until they get back to that full duty work. So modified duty is modifying what their duties are if you are able to accommodate with those.
Awesome. And Mario, while I have you here, I think this next one's probably best for you too. She's asking, I know communication with injured worker is important, but how much is too much? I've heard that question a million times.
I have also. I think it depends. You don't want to bombard them. We as the insurance carrier will absolutely be in touch with the injured worker to monitor their progress, monitor their doctor appointments, and we will be very often the liaison between the employer and the employee to make sure everyone is on the same page. You as their employer absolutely have the right to get those updates also. So we want to find that fine line between too much and not enough. If you have work available for the employee, that should always come from you, as you, the employer, are the one accommodating with those restrictions. We always encourage making sure we offer that timely and appropriately. Follow-ups, if you want to stay in touch with the employee, again, we always encourage that, and we always strive to have our employers stay in touch with those employees. But that communication can be done by phone, can be done by text, can be done by email. There really isn't a set type of communication that we encourage, but it's always good to keep that relationship. If that relationship stays strong, we can get that employee back to work, we can get them fully healed, and we can help you out.
Very good. Next question is, are all industries eligible for an experience mod factor? Paul, you want to take that?
Oh, yes. Yeah, everyone's available to get the experience mod. Again, it's when you reach that premium threshold that we talked about in that one slide. Once you get to that point, you will automatically get an experience mod. So you're going to be excited about that when you have a great loss history, because you will actually help to reduce your workers' comp premium. But the answer is yes.
All right. Looks like one that this kind of falls into Carl's category of what he was talking about. He's asking, are there tools available to help me improve my experience mod factor, and what should I be doing differently? Carl?
Yeah, thanks. So there are tools. I know we went over a few of the programs. I know the one poll question did kind of go into just having a written safety program, could help reduce losses by up to 40%. So that could be something that you're not doing that you could be doing differently. Since it sounds like a lot of these losses may have already happened, I would highly recommend doing the accident investigation program, kind of looking at and seeing if there's any specific trends that are causing all the losses. A specific claimant that's having repetitive injuries all the time. Or if there's one specific task in your day-to-day business that is causing these injuries, see if there needs to be some specific training on that needs to be completed to help reduce the losses.
And can I add in on that too, Carl? That's great, but for everyone out there, don't hesitate to give us a call. We'd love to come out and work with you and help you develop these programs. We're not just going to send you the sample safety program and say, here, do it. We will come and work with you. We will kind of help you out with some of the training needs and things. So utilize the risk control department and utilize Mario's department. They will come out and discuss that nurse triage in more detail with you. They will come out and help you at the return to work. So we're here to help you out to make things safer for the employees and to save you money.
Awesome. That is the last question that I have that has come in. Did have one question about if this will be available, or the presentation will be sent out. It won't be sent out to the attendees, but it's available on our website, societyinsurance.com, under risk control, or like I said, on our YouTube channel. If you want to show your employees or whatever, it's always there and free to use. So with that, I'll kind of close this up, say thank you for joining us today. I look forward to seeing everybody at the next webinar. We do them pretty frequently, and there's quite a few of them available on our YouTube channel to look at our past ones. There are 3 handouts that are attached that the presenters had mentioned, so be sure to grab those. That's some good information. Or if you want to go to societyinsurance.com, there's a whole lot of information there. But thanks everybody for joining us. Hope everyone has a great day. Thank you.